Hi, everybody. This is George Veter, president, founder of Veter Financial, and I'm just excited to give you a fourth quarter little chat here about the condition of the market and where we are right now in relationship to portfolio planning and your financial life going through the end of the year. Okay, so the Dow closed today over 47,000, and so we're less than 1,000 points from our high. We had a little bit of a correction based on concern over valuations of primarily our tech stocks, which I like it when those things happen and give us some buying opportunity. But other than that, this little pause, it's been a really good year in the markets. You know, if you're a moderate portfolio investor, you're looking at double-digit gains year to date for most of you. And who doesn't love that, right? We've prospered well in about every sector of the market. We have exciting things to talk about. Bond investors are happy if you're in the right type of bonds with a little longer maturities. You know, you're looking at exceptional bond returns. And the stock market continues to defy the odds. Every time we have people say something negative, the market just gets more positive. They call that melting up. You know, we just keep going higher based on what the possibilities are out there and the fear of missing out that people just inherently have in their neurological system. The better things are, the more they want to participate. So momentum does beget momentum. Okay, as far as the near-term outlook, we have November that we're just really getting rolling into. We still have earnings left for the third quarter, but so far, as of this morning, 70% of the S&P companies that have announced their earnings have beat their guidance coming into the quarter. That's a big number. So we're bumping our head against 80% again, earnings beats. I mean, who can't love that? We also have, this time of year, the holiday shopping to look forward to. Since World War II, November, December, and January have been our best rolling quarter. December's the king of the 12-month calendar on average returns because of Christmas. And before that, November, which we're into. And then after that, January with the new pension season and the spillover of the end of the year rally. I think we're going to get that again. We've had the Fed that's lowered interest rates twice. And the common perception is he'll lower one more time before the end of the year. But we know that's the direction that money's going. It's going in the direction to get cheaper. And Wall Street loves that, as well as consumers. Now, I'm going to remind you again, we've had pullbacks or corrections, which are 10% market drops. And we've had bear markets, which are 20% market drops, routinely over the years to just correct pricing. That's not something to be scared of. It's a natural part of the way the market moves. In fact, since World War II, we've had 11 bear markets, and we've recovered, you guessed it, 11 times. That's a very dependable pattern to believe in. As far as recessions, when the economy actually shrinks, which we're growing right now, from quarter to quarter, from third quarter last year to third quarter this year, our net revenue on the S&P has grown 13%. So we're a long way from going negative. We're charging. And in that spirit, when the economy does back up due to a disruption that needs to be worked through, we've had, since the Civil War, 1865, we've had 35 of those. And we've recovered, you guessed it, 35 times. So as long as you're allocated correctly and you're not single concentrated and you don't panic and go out of the market when you have scary moments, as long as you have a positive, reasonable, appropriate plan in place, like we make sure you do as your advocate, as your advisor, there is nothing to be concerned about. We just need to celebrate the things that are going right and not obsess about the what ifs on the what could go wrong, because the media would like us to do that, okay? I just want to mention this too. As far as our life experience, what's important as far as what makes us happy is how we choose to frame and look at things. We can stare at negative things in the world, which we have this big, political polarization going on and some nasty things to look at there. If we choose to obsess about that, it's not going to make you feel good. But if you choose to obsess about the good things going on in your life, incredible advancements in technology, both for communication and in our healthcare situation, as far as things that they can cure now that they didn't have answers for years back. Our life expectancy is growing, our standard of living getting better per capita in the United States and around the world, as well as illiteracy rates going down worldwide, and the world just getting better as it evolves. We have so many things to be grateful for. Take time to do that. Acknowledge what your Maker has done for you. Go into Thanksgiving being truly thankful. Enjoy and soak up this season. Enjoy Christmas. Enjoy your relationships. Enjoy the health that you do have, whatever that is, to experience this life with. And know that we, as the firm that represents you on the financial end of things, that we take our responsibility very seriously, and we've got you, and you're going to be okay. And you're going to keep hitting your goals as we go along, and we'll make sure that we give you sound advice, and we care about you, and we'll validate your concerns, but we'll lend you faith when you need extra faith, because we got plenty of it over here. So happy fourth quarter, happy beginning of the holiday season, happy to a wonderful bull market year. God bless you, and I'll talk to you soon. Thanks.